Thank you everyone for joining in. My name is Diana, and today we are with Homestreet Bank. We have Jeff today, who is going to talk a little bit about the Homestreet Bank Down Payment Assistance Program and the different ways we can explore home buying with this incredible new program. So just a few Zoom etiquettes before we begin. We'll ask that the questions that you have be saved towards the end of our presentation. You're more than welcome to add them to the chat, but we will take the last 15 minutes or so of our presentation today going through the questions in order as they come and taking them as they arrive at the end of our presentation. So without any further ado, I'll go ahead and turn things over to Jeff to lead our workshop. Thank you so much, Jeff.
Yep. Thank you. My name again, Jeff Wood. I am a loan officer and sales manager at Affinity Lending, which is part of Homestreet Bank. And it's part of your benefits packages are these classes, and I'll talk about the benefits towards the end of this presentation. But today we're going to talk about buying a home with down payment assistance and the different types of down payment assistance that we have. So what we'll do first is just kind of go over the table of contents for the next slide. And basically, what is down payment assistance? We're going to do an overview of down payment assistance, talk about deferred payment seconds, grants, shared appreciation, additional requirements that you need for down payment assistance and what areas you're looking in, income geographic restrictions, down payment requirements, education requirements, programs with limited funding. So we'll talk about those with each one of the not with each one of the programs, but just kind of an overall basis on it. And then kind of the recommended next steps on budgeting and first-time home buyer checklist, what kind of things you need to do. And then we'll talk about resources, and then we'll recap it with our benefits. So go to the next slide, please. So what is down payment assistance? So down payment assistance is made available through affordable housing or nonprofits or state agencies. So at times we have multiple sources of down payment assistance programs used together to lower your overall mortgage payment on your house. So it depends on where you're buying and what type of home you're buying, but there's down payment assistance programs throughout Washington state that we work with on a regular basis that can help you get into a home. Next slide, please. So just a little bit about the different down payment assistance. The majority of down payment assistance programs are deferred payment seconds. So what they do is they're going to give you a silent second that's sitting there. You can use most of the money for down payment and some of your closing costs, and you don't have any payments on it until you either refinance your house, you transfer the loan, you vacate the house, or you sell the home, so or refinance. So some of the loans accrue interest until they're paid off, while some are interest free. So there's different programs that we have. Some are simple interest at 0% or 1% or up to 3% simple interest. The next one is grants. Grants are loans that don't have to be repaid or forgiven over a certain period of time, as long as you occupy the house. So we have one that we work with on a regular basis that we do quite a bit. But usually grant funds, those are ones that go really fast because, again, those ones that don't have to be repaid. So people want those a lot sooner, and they'll get that, they'll try for that money a lot quicker than other funds. And then we talk about shared appreciation. You may be able to purchase a home at a lower market rate, but what they're doing is they're giving you a lower purchase price, or part of the down payment is reduced. So once you sell the house, they will also incur part of the profit in the house when you sell it. So if they're giving you 20% when you go to sell the house, they're going to take 20% of what they gave you plus 20% of the profit. So they do make some money on the sale of your house if they helped you get into the house. So with shared appreciation. Another community program that we work with are land trusts. There's 27 different land trusts within Washington state. I work with about 3 or 4 in Washington. We have others in other states as well, but they keep housing affordable for the next person as well as yourself when you're buying a home. And they let you buy it in a lower than market purchase price, and it keeps your payment low. And most of the down payment is tied into the land trust itself. Next slide, please. So most of our deferred payment silent seconds are coming from the Washington State Housing Finance Commission. So this is a program that we use. We have a Home Advantage or a House Key Opportunity program. They can be used with conventional financing or FHA financing, as long as you have a 620 credit score. First-time home buyer in most cases. The Home Advantage, you don't have to be a first-time home buyer. You can get down payment assistance anywhere from $15,000 up to 4% of your loan amount. So sometimes even 5% of your loan amount, depending on what is needed for the purchase. And so it also depends on the county that you're looking at purchasing. So the down payment assistance is a second mortgage that has to be paid back. And the payments on it are deferred. So the Home Advantage one is a 0% interest rate, where the House Key Opportunity at 15,000 is a 1% interest rate. So it accrues interest of $150 per year until it's paid off. And it's simple interest, so it's not compounding. And then payment deferred means the second mortgage doesn't require repayment until the first mortgage, again, is either paid off, the property's refinanced, you move out and you turn it into a rental. A lot of times they'll make you start making payments on it then, transferred or sold. So you want to contact the loan officer about that information, or you can contact me and my contact information as well if you have questions on that later. Next slide, please. Okay, so just kind of give you an idea of the Home Advantage down payment a second. So let's look at a sales price of 450,000. Your loan amount is 436,500. So you have a 3% down payment, and so your down payment is 13,500. So now the loan is based off, the down payment assistance is based off the 436,500. So 4% of that is 17,640. So you'll get 17,460 for down payment. And so that'll cover all of the down payment of 13,500, and it'll give you just under $4,000 for closing costs. So that's a 3% down payment and a loan amount of 4% for the down payment assistance. So what's nice is there's no interest rate on that $17,460, and it's just due when you sell the home or refinance or move out of it. So it's a great program to use that to get in. And then even if you get seller paid costs or a family member paying closing costs, they can pay some of the closing costs, so you can get in with as little as $50 down sometimes. Just depends on the program. So next slide, please. So the next part is our down payment assistance and grants. So the Federal Home Loan Bank is our main source for grants. We have a couple others that we work with from time to time, depending if they get money from the federal government, and we can use that money for down payment. So how this one works is that it allows you, for every dollar you save, they'll give you $3,000. Or they'll give you $3, sorry. So if you save $2,500, they can give you up to $7,500 in grant money. So you want to check to see with your loan officer to see if you are eligible. Typically, it's 80% median income for a family, for the family size. So they look at family sizes from 1 to 10. So depending on your family size and the county you live on, depends on if you're available for this grant. So it's eligible up to $7,500. And what's nice about this, it's forgiven every year for 5 years. So 1/5 per year is forgiven until you've lived in the house for 5 years. Now, if you sell the house in 3 years, you have to pay 2/5 back. So it's nice because this money is used for down payment and closing costs. It can be layered with any of our other down payment assistance. So you can put that in with your closing costs and add it to your down payment assistance that you have of 15,000 or 17,000 from one of our other programs. So you can use, again, for down payment and closing costs, no repayment after 5 years. It's a great program, but this money goes fast. It's usually available April 1st. It's usually gone before April 15th. They make more available in October. Again, it goes really quickly. So they usually want you to be home ready to buy within the first year after reserving these funds. Next slide, please. The next one is community land trusts. So I work with a number of community land trusts here in Seattle, Bainbridge Island, and a few others within the different counties, Pierce County up to Snohomish County. But how a community land trust works is the family or individual purchases a house that sits on the land owned by the community land trust. And so the house price is kept low because the land is owned by the land trust. The purchase price is more affordable because, again, you're only buying the house and not the land. So you're renting it, the land from the community land trust, typically a 99-year lease that is renewable. So it's nice because they'll keep the home affordable for you and for the buyers down the road. So let's say you buy the house, they're helping you. Let's say it's a $650,000 house in Seattle. Your mortgage is $325,000. So that 650 is now just a 325. That 325 difference is held on by the community land trust. So they own the land, and so they hold a large portion of the ownership in that property. But you're only making mortgage payments on the 325. So and then the other thing is it is restricted once you do sell the house, they're restricted to selling it to other community land trust potential home buyers. So it's not sold on the open market. They have a factor on how they sell it. And so if you do get your money back of what you put into it and any improvements you've done to the house. So if you've improved the house, you can get that money back once you do sell that house. Next slide, please. Okay, so this kind of shows you a standard purchase price compared to the community land trust purchase price. So this one's a little bit, the last one I gave was a little more accurate just with the 625, but with the home value, let's say is 425, the leasehold portion of it's 150. So they've contracted and said, okay, your purchase price is going to be 275,000. So you can have your loan up to 275. So you have a zero down payment. Typically you can bring in your closing costs, or they can actually wrap in some closing costs into the deal as well. But most land trusts will require a 1% of your own funds into the transaction. So in this case, 1% of 425,000 would be 4,250. So $4,250 of your own funds is brought into the transaction. And so no down payment, bringing in about $42,000 to $5,000. The next one is just showing the standard price home value of 425. And you get the part is blocking real quick here. So if your home value is at 425, purchase price is 425. Typically, your minimum down payment is 3%. So that's where your 412, 250 comes in. So your down payment for a minimum down payment on 425,000 is 12,750. So they can see where the difference just right there. Plus, your mortgage is going to be a lot lower. With $150,000 less of a mortgage payment, you're probably a $300 to $400 less on your mortgage payment because your loan amount starts at 275 and not 412,000. So that's kind of a nice part about the land trust. They keep it lower, and a lot of times they get the county to reduce the property taxes as well. So they keep that affordable as well. So your property taxes aren't skyrocketing. So if your 420 value keeps going up, you're not paying the taxes on a 425 home price anymore, or higher home price anymore. So it keeps that intact as well. So next slide, please. So additional requirements for down payment assistance. So there's they're not limited, but a lot of times it's income and geographic restrictions. So depending on where you're buying, what your income sources are, they typically look at family sizes and income based in the county or city that you're going to live in. Down payment requirements, some require a certain amount of your own funds. A lot of them are 1% of your own funds into the transaction. Some require the 3% of 3% of your own money into the transaction. So it just depends on the program that you're working with. Education requirements, most of them require a first-time homebuyer education course. Typically, it's the Washington State Housing Finance Commission course. It takes 5 hours if you do it in person. If it's an online class, I believe they still do 5 hours, but you can also do a self-study, but they charge about $50 per person on the self-study. So if you do an online class, they do have a charge for that one. And then the last one is programs do have limited funding. Sometimes they put the money out there and it's gone instantly. So we had one that was just like that for 20% down, up to $60,000 down in Vancouver, Washington. That funding went probably within 30 days. It was gone. So it just depends on where you're buying and how soon the funds are there or not. The city of Seattle has a $55,000 down payment assistance program, those funds are very limited as well. So just depending on how many people are using those, and if you have to get on a waiting list to get into that program sometimes. So next slide, please. So the next steps we're going to talk about to get yourself ready for the down payment assistance programs or just buying your first home. Next slide, please. So the first thing you want to do is budget for a home. So there's some just recommended tips on this. Not everyone has budgets, but a great thing to do is just get your family involved, start a budget with your family, figure out, evaluate your current spending versus income. Don't forget to adjust for your overall taxes. You want to list your needs and what your wants are. So if you need this, or you want this, you got to figure out, okay, this is definitely a need over, okay, well, I want this, but we're gonna have to wait. And identify the right budget plan. There's a lot of plans out there. If you use Quicken, if you use mint.com, there's a lot of different programs. I think last time I checked, there was like 29 different money management apps on a phone that you could just download. And so there's great ways to budget and set up your budget with your family and figure out, okay, this is what we need to plan on, and just see if there's things that can be eliminated in your budget and other things that you can't, you have to have in the budget. So you got to kind of keep it as a working work in progress as you're budgeting and kind of getting down the road on figuring out what you need to do for savings for that next house. So set up a savings goal. Define what you're saving for. So if it is, let's say a house is too far in the future. Let's say you're saving for a car or you're saving for something else. Set that savings goal. Set yourself up to give you a timeline to get to that savings goal. So you gotta have enough time to save the money. This isn't something where I'm going to save all this and suddenly, boom, I have to start using my credit cards to live because I'm saving my money. So you don't want to sit there and take it from somewhere else. So that's where the budget is important for first-time home buyers. Set it up early so you know, okay, this is what we're looking at doing. What we need to set up each side per month for savings, what we need to do for each payment. So the next one is when you're setting up that savings is figure out, okay, what is your housing price going to be? Okay, I'm paying $1,800 or let's say $2,000 in rent right now, and my mortgage is going to be $3,000. What do you do with that extra $1,000? What we do a lot of times is just kind of help with first-time home buyers. So let's say you have a $3,000 payment and you want to see if that works. Take that extra $1,000, put it in savings every month, and see if you can get by without touching it or going into your credit cards. That's considered payment shock. It's the difference between your current rent payment and future mortgage payment on your house. So if you can sit there and save $1,000 a month, maybe $3,000 is a good payment for you. But if you're dipping into that savings each month, maybe that payment shock is a little bit too much for you. This used to be a requirement back in early 2000s where you had to save your payment shock for 6 months before you even bought a house. So they've kind of gone away from that a little bit, but they still teach about getting that savings prepared for payment shock. So set your goals up, figure out, okay, can I afford extra $1,000 or $500 on your housing expense? And just put it away and not touch it. It's also a great way to start building your savings up. So having your savings built up is very beneficial down the road, even if you use down payment assistance, because there's going to be some other added costs when buying a home. So you also want to factor in other costs with your payment as well. HOA dues if you're buying a condo, increased utilities if your utilities are all being paid right now by your homeowner or your landlord. Home improvements, not to mention new equipment like lawnmowers and things like that. So a lot of things that might have to come into play that you're not used to as a renter going into being a homeowner. So next slide, please. So what we want to do is kind of do a first-time home buyers checklist. So this is kind of a helpful suggestions for first-time home buyers. Take advantage of free financial education. We offer free financial education classes. Our next one is a homebuyer class July 15th from 10 a.m. to 3 p.m. in Bellevue. And you can register with Jessica Santana at homestreet.com. She's one of my colleagues here at Homestreet. She's teaching these classes about once a month. And so that's our next one in Bellevue. And they do fill up pretty fast. I know they have limited space, so that'd be a good place to get started. That's a 5-hour class I was talking to. Most of the classes or most of the down payment assistance programs that we work with use that class. So it's a great information, but it does take most of your day. Again, if you want, I do have contacts if you want to do the online course as well. Get pre-qualified. Pre-qualification allows you to move quickly once you find your dream home. So if you found a house and you're like, how do I know I afford that? Getting pre-approved helps. Get the pre-approval done. It's good for 90 to 120 days. And it lets you know, okay, this is the program I want. This is the loan amount I'm approved for. And it makes you have a more confident bid when you're actually making that purchase. So next slide, please. And then make sure you have all the required documentation as requested by the loan officer. So you want to get copies of your pay stubs for all borrowers for 1 full month. If you're a teacher, you get paid once a month, so we need 2 for anybody that's paid once a month, like teachers. Copies of most recent bank statements or investment accounts covering 2-month period, including all pages and where funds will be used for the loan. Please, and just make sure you have all pages in there. Even if it says 5 of 5 and it's blank, we have to have that page. Copies of your W-2s, not your whole tax returns, just the W-2s that you get from your employer each January to file your taxes. Because most W-2 employees, we just need the W-2s, not your full tax returns. If you have a second job or if you're self-employed, a lot of times we need 2 years of your most recent tax returns. So 2022, 2021, we will need those tax returns for self-employed borrowers, or if you get a lot of overtime, bonus, or other incomes. So next slide, please. Okay, once you're pre-approved, that's when you want to find a real estate agent. Sometimes I have customers that come to me, they've already found a real estate agent or they have a family friend. If you don't have a real estate agent, we do have resources that you can work with and talk to other agents that we work with. You don't have to use agents that we work with. It's good to know an agent or interview a few different agents to kind of see how their style is, see if it works with you. Find out if they're a full-time agent. So you want to interview those agents before you're out there looking at homes. It's really easy now to go online, look at homes. I would recommend not using Zillow. Use a Redfin, use a Windermere, a John L. Scott, any of those Remax, any of those websites are great search tools. Zillow is not a real estate firm. So be careful on those because they aren't always accurate or updated if you're looking for homes on Zillow. Zillow's, in my opinion, is great to look at homes values and kind of look at that information. They are not a listing service. So the multiple listing service is tied into real estate offices. So again, it's great to look those up. But again, if you don't have an agent, we do have a number of agents that we work with in different areas all over Washington. So it's a good benefit. It's also listed in your benefits as well. Next slide, please. Okay, so once you're out there, you find a home, you make an offer. This is when your real estate agent can go in and negotiate things for you. They make an initial offer. They can negotiate any terms or condition if you want closing costs. If you want this big screen TV that's on the wall, if you want the hot tub to stay, there's a lot of things that they can add into the loan or take out. So most everything's negotiable in the price of the home. And that's where the real estate, they earn their money. They know what to ask for. They know how to negotiate. They do this on a regular basis, and they do a really good job going through and explaining everything through the purchase and sale agreement. And they can talk to you about the ins and outs of the purchase and sale agreement and things that will protect you. If you have different clauses within your purchase and sale to protect you as a home buyer, especially first-time home buyers. So, and that's where getting pre-approved or pre-qualified will have to give you a little bit of an edge over other buyers, because right now a lender or a realtor doesn't want to take their house off the listing with a buyer coming in that's not pre-approved. They want to see that pre-approval. Next slide, please. Okay, so once you found the house, you're going to order an inspection. Typically, you have about 3 to 6 days to have an inspection done. Most down payment assistance programs will require you do an inspection. Even if it's not required, ordering one may save you money or problems down the road. It could find things with the house that you may not have seen because you're not looking at it as a contractor, or you're not looking at it as a home inspector. You're looking as a buyer, like, oh, this is all done really well. The home inspector will go in and take a look at the house and can see some warning signs and see things like cracked foundations or water damage or leaky things from a leaky roof or things to look for. So it's money well spent. It's typically $450 to $500 for a home inspection. That is something you do need outside of your down payment and closing costs, because that's paid for as it's done when you go out there with your realtor to have a home inspection finished. Sometimes with the down payment assistance programs, if the seller has paid for a pre-inspection and you're going to use that, typically we can use that. We just have to have it okayed by the down payment assistance commission. Once you have that contract in hand, you want to notify your loan officer. Our interest rates change daily. So contacting your loan officer gets you started on figuring out, okay, here's my rates and everything for this loan or for this down payment assistance program. And we know your close date. So here's some different rates. Like we just got a notification that rates went up today. So our rates across the board have gone up this afternoon. So they're a lot cheaper this morning. So it's good to know, let's get that purchase and sell in first thing as soon as you have it, so they can start quoting you different rates. Again, forward the purchase and sale to us, and your loan officer and real estate agent need to know each other and kind of talk to each other and kind of say, hey, this is the timeline. Can we do this? Let's get this moving. Next slide. And then the one thing before closing is also shopping for home insurance. So contact your current insurance agent that you have insurance for, maybe for renter's insurance or for car insurance. Typically, they can do a good job with bundling and saving you money. Don't want to sound like a Geico commercial, but you do typically, it's a great time to shop for insurance for your home and your car, because you can save money as a group insurance. We also have Homestreet Insurance, which is a broker. They work with about 8 different agencies that they can go through, which is, it's kind of nice. So you can always get a free quote, compare that to other quotes that you have. Now, some down payment assistance programs have multiple liens. And so one thing you do have to check with if you go with a Progressive or a Geico is to see, and I'm not just picking on them because I know those are two that have a hard time with this. They can't do more than 2 liens. Some of them don't even like more than 1 lien. So if you have a down payment assistance program that has 2 or 3 different loans, some of the insurance companies actually cannot insure your loan. So if it's 3 or 4, a lot of times it's harder to find an insurance agency that will say, yes, we can do that, because you have to insure all 4 liens in your insurance carrier. So keep that in mind if you do have down payment assistance and you're shopping for insurance. Let them know, yes, I've got 3 liens on this property. Will you still do it? So it's a huge kind of a headache to avoid ahead of time. So next slide, please. Okay, and then last is notify your loan officer when your home inspection is complete. Typically, you want to do this within the first 10 days, because we want to make sure you're moving forward with the home, because once you have your home inspection done, we do our own inspection. We will send out an appraiser to go out and inspect the home to make sure the value of the home you're paying is similar to other homes in your area. So we don't go and inspect the house inside and out to make sure it's working right. We do notice a few things, like if the roof is in disrepair, or if something like there's no railing on your deck, or the stairs are missing a railing. They do notice things like that, but they won't go in and check for things that a home inspector will do. They make sure that the house is intact, in good living order. It has to have a heat source, has to basically have windows. It has to have a stovetop. Doesn't have to have a refrigerator. So you could buy a house and might not have a refrigerator. So that's one of the negotiations that you have to have when you're buying a house, making sure it has the appliances that you want, if they're staying or not, because some homeowners do take them. So that's part of the purchase and sale. You want to make sure things are in there that are there when you're buying it. So once you have that home inspection done and you've got everything all figured out, we order the appraisal again. It will look for houses within the last 6 months. out to a year, typically within the first 6 months, that have sold that are similar. So we're not going to compare it to a condo or a manufactured home. We're going to compare it to a single family house to a single family house, manufactured home to manufactured home, condo to condo. So it's a very similar house in the area, similar price to make sure the value is there. Um, Once we've done that, we let you have a copy of the appraisal, review it as well. And then we have closing, which is about 2 weeks after the appraisal comes in. Um, we're going to start getting all the last minute documents from you, updated pay stubs and bank statements to make sure that everything's still kind of the same. But a week before closing, you want to talk to us and figure out, okay, how are the required documents all signed and ready to go? But if 3 days before closing, we have to set up what's called a closing disclosure. So we'll send out a closing disclosure. It kind of gives you what your out of pocket's going to be, what your payment's going to be, and it talks about your cash to close. And that's when, and again, it's a few days before closing, and the closing agent will call and set up the appointment to sign those documents. So the two things are kind of out of order. So you'll get the closing disclosure, then the closing agent will call you, and then you'll bring up cashier's check or wire money to escrow based on the closing agent and what they've told you. Now, if somebody gives you an unsolicited email and saying, "Oh, you got to send me your 5% down now," or "send money to this address," don't answer an email from your escrow officer asking for money, or from a loan officer or from a realtor. Make sure they're calling you or you're calling them and talk to them about wiring money. Anytime you're wiring funds, you want to make sure it is going to that closing agent, because there's a lot of wire fraud out there, spoofing of email addresses. And so what they're doing is they find out that you're buying a house. I had one customer that they sent a request, "We need your 5% in." Well, it was kind of weird because it was 5% and they wanted it on a 3-day weekend. So they're like, they questioned that and they asked the realtor. The realtor said, "No, you shouldn't be sending exactly 5% because you're going to have closing costs and 5% minus your earnest money." So there was a lot of things that were kind of fishy about that. So luckily they did save their money, but make sure you're not sending this just email request for funds. Typically, they will not request funds that way. They'll call you and talk to you about what your funds are going to be. Next slide, please. Oh, I guess they didn't talk about the rest of closing. So once you've wired the funds, you'll sign a couple days before closing. I'll go over this slide next. But once you do sign the documents, it's usually a day or two before closing. That's when your money's wired. The next day is your close date. That's the date that the money is received and you get your keys up after typically closing of the loan or later that night by 9 p.m., depending on how the contract reads. So once you're signing, it's a 2 to 3 days before your closing. And your closing is when all the money and all the transaction happens. That's when you get your keys. And the realtor will set up a time to meet you and get your keys in most cases. So we'll talk about some resources that we have for first-time home buyers. One of the biggest ones we have, it's a free resource that we have, is American Financial Solutions. They're a nonprofit credit counseling and financial agency, education agency. Just go to myfinancialgoals.org. They're based out of Bremerton. They have a couple offices in Seattle as well. Most of their tools are online, over the phone. They don't meet everybody in person. Most of the stuff's online. It's a great program. They can help you build your credit back up. They can help in foreclosure prevention. So let's say you get in a bind later after you buy a house. They can help with bankruptcy foreclosure or bankruptcy protection. They can help you talk to your lender. Let's say your lender's huge and you're trying to get through a call center and you can't get through to make payment arrangements. They can actually talk to your lender for you, make those payment arrangements. They're a great resource in the community. They do charge some fees on some of their programs, like the consumer credit counseling, where they actually take your credit cards, get them lowered down to 0 interest rates, and make the payments for you until you have no more balance on your credit cards. So programs like that, they do charge a fee for, but most of the programs they have are free. It's a great resource. Next is Fannie Mae. This is a secondary investor. That's who we sell our loans to mostly, is Fannie Mae is one. It's a conventional loan. So we actually will close the loan for Fannie Mae. and then we service it, but we sell it to Fannie Mae because it's their loan, but we will service it and they pay us to service it. Next one is FHA, is Federal Housing Administration. They have a low down payment program for lower credit scores. They help with renovation loans. Great program for some home buyers. Really low down payment. It's nice. At FHA.gov, we do those as well. We also service those. And we sell them to FHA, but we service again. Freddie Mac is the other conventional loan that we do. Freddie Mac is just this, it's very similar to Fannie Mae, but they buy the loans from banks, and most lenders will service those for Freddie Mac or Fannie Mae. Next one is HomePath, properties owned by Fannie Mae. So I go to homepath.com. It's a great way to find foreclosed properties in your area. It's not as widespread as, let's say, back in 08, 09, but homepath.com has great deals sometimes for houses that are for sale. They're foreclosed by Fannie Mae, and you can look up HomeSteps is Freddie Mac's website, excuse me. And that one's not on here, but those two both show what foreclosed properties are, if they're available in your neighborhood or in your county or in your city. So next slide, please. And then Homestreet Bank Affinity Program, lunch and learn seminars similar to this one, down payment assistance programs that we have, and then reduce closing costs. It's just homestreet.com/UW. HUD, the Housing Urban Development, is affordable housing advocate, consumer protection, and home buyer homeowner resources. So HUD.gov has quite a few different resources that you can look up as well. USDA Rural Development is a program that we use. It's a zero down program for rural areas. So it's a great program for low to moderate income and rural households. They have form of grants and other loans that help facilitate the purchase and repairs and renovations of your homes. So if you can go to that, it's rd@usda.gov. So it's a good program as well. We do originate those loans. And then if you're a veteran, we have Veteran Affairs. It guarantees zero down loans for military veterans by lenders. It just benefits at va.gov /home loans. That's a program we work as well. If you are a veteran, we have that program set up as well. So next slide, please. Okay, and then just a quick rundown of our Affinity benefits. I'll go to the next slide. So cost savings, the biggest part of our program is cost savings. So we have an administrative fee discount. So if you have a $400,000 loan, you're going to get a $2,000 credit from Homestreet. Let's say you're participating realtors, if you work with one of our realtors, and it's a $500,000 purchase, and they'll give anywhere from $2,500 to $5,000 for closing costs. So between our $2,000 and their $5,000, you can get up to $7,000 for your closing costs, and helps pay all the closing costs. So you just have your money for down payment. Down payment assistance information. You want to talk to one of the Homestreet loan officer. Make sure it's an Affinity loan officer. There's 4 of us here in Seattle that we can work with you on down payment assistance programs. Free financial fitness tools. We have the seminars ranging from from budgeting, best practices to steps in home ownership. We also have newsletters, toolkits, and podcasts. So there's a few things that we do offer. And then especially American Financial Solutions with what they can offer as well. And then these benefits pass on to your immediate family members as well, parents, children, sisters, brothers. So they can also receive the same discounts and program benefits that you have. Again, it's exclusive Affinity program. It has to be through an Affinity loan officer. You can't just call one of the branches and get the discount, because we do have commission sales loan officers. They do not pass on these discounts. They just close the loan, and they're not able to give the discounts because they're full commission loan officers. So call one of us. Basically, it's myself, Nancy, Jessica, or Ryan are the 4 loan officers here in the Seattle area. So next slide, please. So again, any questions? We'll have a question and answer after this. But if you want to know information, my contact information is here. My email, and then also my phone number. And then with the QR code, it'll take you to our website or homestreet.com/UW. So that will give you most of the information. And then we'll open it up for any questions.
Yes, thank you, Jeff. Yeah, if you have any questions, please feel free to put them out there. I see one in the chat room. Yes, an attendee is asking if we can get access to the slides. I'd be happy to pass them on.
So I have a question about the market, if that's okay. Where do you see first-time home buyers buying? And then also with the interest rates being so high, are people just waiting for, so with interest rates going higher, I'm noticing a lot less or a lot, some, I don't want to say discounting or some homes being slightly less than they were before. So what happens when the interest rates go down? Are you going to just see a flux of people buying again? And
Well, it really depends on where you're purchasing. It is definitely in certain counties, you're seeing a lot more purchases happening, but you're seeing a lot more fighting over and more multiple offers on properties in outlying areas that are closer to work. So I'm seeing a lot of customers that the inventory is so low in Seattle that people are still looking elsewhere for homes. So if they're finding a deal, let's say south of Seattle in Kent or Des Moines or up in Snohomish County, they're still fighting over those homes. So you're seeing 10 to 20 different offers on houses. So even with the higher interest rates, they're not deterring some homeowners. It's making it tougher for first-time homebuyers to get in, because if they don't have the down payment assistance, or they don't have the down payment or the money to qualify, their payments are a lot higher. I used to quote first-time homebuyers payments $1,800 to $2,200 a lot of times for first-time homebuyers. That's jumped up to $3,200 to $4,000 a month. So a first-time homebuyer paying $3,200 to $3,500 a month is a big jump from what we used to do. So it's tough it's tough to say where the market is. A lot of my first-time home buyers are turning into condo buyers at the moment, just because that's something that's still a little more affordable than house prices in your area, depending again what area you're looking at. But you'll probably see another frenzy come if rates do come back down. So that's prices will probably continue to either flatten out or rise. If they lower interest rates, they'll probably start to go back up again. I see that there's a thing on discounts, etc. The discounts that we offer are not based on need. They're everybody across the board from UW will get the half a point from Homestreet, from our Homestreet Affinity loan officer. And then our realtor, it's depending on what the seller's paying the realtor in their commission. If they're getting a 2.5% or a 3% commission, they give up to 0.5% to 1% of their commission. So if they're getting a full 3% commission, our agents will give you 1% of their commission towards closing costs. So 1% out of 3, you're sitting on a $500,000 purchase. That's where the $5,000 comes in. It's 1% of your purchase price. So it can be quite a bit.
The next question I see is it best to buy something now and refinance later?
That's where some people are gambling, because again, I shouldn't say gambling, but some people are investing into the home.
Oh, Jeff, you just cut out. I'm not able to hear.
So
I can hear you
where
now.
a lot of people are taking the chance right now investing is buying something now. They are planning on refinancing later because they are thinking rates will go down. I mean, we haven't been this high on interest rates since probably even in 08, 09, we didn't get this high. I think late 90s, we were up in this range where we're buying. My first home was at 6.375. We had to buy that down from 7. So it's very similar to where we were in 98, 99 for homes. So it just depends on what's going to be happening with the rates and if they do come back down. But again, once you get into the house, it's not the end all that if you have a 6.5 or a 7% interest rate, you can refinance that out. All of our loans do not have down payment. They don't have penalties for paying off early. So most homes can be paid off within 6 months after consummation. So.
All right. We've got about 9 more minutes. So if there are any other questions, we'd be happy to answer them now. You will get access to these
Yeah, and
slides.
if you have questions later on or want to email me, my contact information is here. I'm happy to answer any questions later on.
All right. Okay. Well, I want to thank you all so much for joining in, folks that could make it. This session has been recorded, so we'll be sending out the recording as well. And again, all of Jeff's information is here for you to access. So I hope everyone has a wonderful rest of your afternoon and a gorgeous day. Thanks all. Thank you so much, Jeff.